Hey fellow investors and fellow stock guardians. It's Friday, January 15th, 2021. I'm Hoda, co-founder and CEO of StockCard, and here's a recap of today's noteworthy movements in the market. The stock market indices finished the week in the red once more. There was a rapid fall in the early hours of the trading day, and even though all three indices dug their way out of the dip, it wasn't enough to get them out of the red zone. The market dip is a reaction to the drop in the retail sales in December reported today by the U.S. Census Bureau. Consecutive to the drop in the retail sales, the 10-year Treasury yield fell below 1.1% as worries about inflation rate faded. I took a look at the winners list for the day and nothing interesting jumped. Perhaps the most interesting winner of the day was Home Depot. Shares of Home Depot were up more than 2% on Thursday. There wasn't any specific news to justify the 2% gain. It's a profitable, cash-generating company with a solid dividend that can be invested at a fair price at this point. Compare this to this industry. It has a reasonable price-to-earning ratio, and it is one of the only retailers that have managed to stay strong despite the transition of the world to e-commerce. This is the kind of a stock you can add to your portfolio, enjoy the dividend, and not to worry too much about its future. Today, I picked up a few shares of Solar Edge Technologies, ticker SEDG. Shares of Solar Edge fell more than 15%, and I saw that as an opportunity to pick up shares of this company with a strong balance sheet and a history of volatility to take advantage of the market's rapid movements. There was a spike in solar stock prices on Thursday when President-elect Biden announced his stimulus plan, which included a push for solar energy, but SEDG took a beating after a rather quiet launch of a solar converter by the almighty Tesla. Time after time, we've seen the market react irrationally when one competitor launches a lookalike product, and then we learn that the success is way beyond just launching a new product, and it takes so much more. Let's talk about the rise of social e-commerce. We've seen the success of brands such as Etsy and Pinterest in 2020. This week, a new IPO named Poshmark went public. If you're like me, until the company went public, you had no idea that such a company even exists. Apparently, it gives you a shopping feed where you can see what others have bought. Before you and I can invest in this stock, the price surged from $42 IPO price to $97 opening price. Since then, it has lost more than 80% of its value. Well, the stock itself is something we need to research later on, but take a look at the internet shopping list of stocks on StockCard. There are several new IPOs in this space. You can see several companies with only a green and growing growth potential and no operational price, return, or valuation data. That is pretty typical among new IPOs. Typically, when there are several new IPOs in the same space, it is the sign that the industry is getting ready to shift and evolve. Yes, many of these new unknown names stay unknown and would go bankrupt, but somewhere in this list, there is the next Amazon and Shopify. It's a list of stocks worth watching as these new IPOs like Push announce their quarterly earning reports and we get to know them better and better. Something to watch in 2021 and beyond. That's it for today. If you like this quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I will see you next week.